Hey everybody, good afternoon. Good afternoon. Today is Thursday, November the 6th. I am an associated member of T3 Trading Group, which is an SEC broker, dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I got out of SMCI today. I added to uh, Joby, I added to QBTS on the way down today on some breaks. Adding on the way down. Adding on the way down. And I got out of SMCI. Um, okay. All right. So today is a day one support break. You heard that right. Haven't said anything like that in a long time. Today is a day one support break. I can't remember the last time we had a support break. And it's on a day one, too. Spies finished down a bit over a percentage point. We snapped back a little bit after the close. Qs here finished down almost 2%, like 1.8, 1.9. The IWM down like a percent and three quarters or so. Um, TLT snapped back a little bit from some big weakness yesterday. The dollar snapped back down a little bit after getting extended to the upside. So snap back to the 80 MA on the daily for the UPTF. Gold down but in range. Oil down really small, kind of in range or maybe a little bit below range. Bitcoin down 3%, honestly, and looks terrible on the daily chart again. Ethereum down four and a quarter, not looking great, little inside and down on its daily chart there. And Solana, kind of same deal, down four and three quarters, almost 5% Solana. So crypto continues to really be in a rout here. Um, so as far as the technicals go, we have been looking at 680 on the upside and 674 on the downside as our near-term levels. Below 674, which just happened, this market goes from bullish to neutral, in my opinion. You know, we play that fun game of bullish, bearish, neutral to give us a general understanding of which direction we should be focused on in the market. And then from there, we get a lot more nuanced. But below 674, technically speaking, this market's going from bullish after breaking out above 674, going parabolic, actually breaking the rising channel to the upside, up then down. And then even with the attempt of a save from Amazon and Google and a couple other decent earnings reports, it has not been enough to overwhelm what Meta's been doing and what Oracle's been doing, and now Microsoft is breaking back down. And we got the break of 674 support today, and because yesterday was an up day and a rest day, it within kind of that range and holding support, that actually makes today a day one break of support. So it's interesting. Again, it doesn't make us bearish. It brings us back into a much broader range that we were here in October. But, if we're able to have a day two down, there's a good chance that we might get close to triggering our CTA sell trigger, which is sitting somewhere around SPY 666. I actually think it's probably slightly above that. I'm just talking about the Goldman Sachs data one. I think if I remember correctly, it was what, 6677, I think. I'm just going off memory, so I might be a little bit off on that. Um, so we got, fairly close to that. The low of the day in the spies is 668 spot 72, another $3 down or so, and you're actually beginning to trigger the Goldman Sachs short-term CTA sell trigger, which has not been hit since they started buying everything back. Has not been hit. Last time that got hit was probably back in February, and it's been sitting at, fully in, basically all in. We know vol controls rolled off a little bit, but CTA trend following trigger has been fully long still and has not triggered. So, a little bit further and it could trigger a little bit more of an unwind. So that's the question is do they hold that or not? Do we get a day two? Do we get a day three? Right now, I want to take it as it comes, but I mentioned that the 674. I'm interested in potentially buying like a broader dip into market end, and I'd love to know if anyone just knows off the top of their head what percentage we are as of today's close from the all-time high. But if we're able to cover that CTA sell trigger and we're able to sell down a little bit further here, maybe you start getting closer to like I'm just kind of making up a number here, like 4 or 5% down in the spies, and you unwind some of the CTA sell trigger. Maybe you get us to retest this, 655 area, something like that, into a day three with extreme downside extension after the CTA sell trigger has been able to unwind a little bit. But if it's able to do it rapidly, into that degree of an extension would be where I would probably look to really unwind these shorts a little bit further and potentially do some selective buying to see if we can nab some sort of a year-end rally. So for the moment, I'm still being patient than any longs, but on my shorts, I'm trying to be that saying that we like to use: be greedy, don't be stupid, right? I want to make sure that I maximize my reward on the downside as best as I can, but I want to uh, also make sure that I'm not a pig in case we do snap back faster, quicker than I would expect. I want to make sure that I've booked enough profit. But, for the most part, it's been a down move that we were able to forecast with, you know, to give credit where credit's due, but also to not give credit where credit's due. Um, it's been really hard to look for this market pullback, right? I started really looking for the market pullback in September, and we couldn't get it. We had our first Fed cut in September, and we know that the one time that September sometimes is green is when you have a non-recessionary Fed cut, which is what we got, and we got a green September. And then in October, we kept talking about the asymmetric risk to the downside, right? I remember having that afternoon meeting on like October 8th, and someone in the YouTube who follows along was like, "Why do you keep talking about looking for the downside? It's an uptrend." And I had to, really, really explain, I think, on the afternoon meeting back on October 9th. I'm not necessarily calling for downside. I'm just trying to let everybody know that based on the data, there's asymmetric risk to the downside that you could get something like this. And then I was kind of justified, within a couple of days because it happened. But even with this huge down move that we had, we never actually even covered the CTA sell trigger because retail just held this market up, and we had our, VIX squeeze, but retail held the market up. And then coming from the VIX squeeze, when the VIX came down, it enabled the market to break out to the upside. And this was the one thing that, from a technical perspective, that was really missing. If you want to be a bear, this is the one thing that was missing. Um, it, I've said it a number of times, but I think it's worth saying again. One of the most incredible things about this rally there was still a lot of volatility in May, but really, once you got to basically the end of May, the incredible thing about this rally is that it's one of the strongest like market cycle rallies in history. Like, and there's a lot of metrics that you can use to do that, but like that amount of days above the 50 SMA, longest since 2011, one of the longest in history. It's one of the strongest market rallies ever without any pullbacks along the way, but yet we never got extended to the upside. That was the most incredible thing about this rally. We basically never got extended to the upside. Um, we got uh, like 1 or 2 days of extreme extension at the very end of June and the very beginning of July. You had like June 30th with extreme upside extension by my measurements. You had July 3rd with extreme upside extension, which is a holiday trading session, by the way, and it's like one of the strongest days historically of the year, where we got to extreme upside extension. But that lasted for one day. And then we pulled back. We had one down day into the ADMA, and we kind of continued our grind. And we did not have, even though it's up and up and up and up, with literally like 2 down days here, end of July, beginning of August, one down day here, basically that October 10th day, one tiny pullback in mid August. I think that was when I was in Chicago. Um, we never hit extension to the upside a single time on the way up. And that saying, I know Bill Kay is a big fan of this saying, the up then down kind of saying. It's for a reason. There's a reason why when there's a reason why my friend Sammy Abusad says never short a 45-degree angle uptrend, never buy a 45-degree angle downtrend. You need to short them either because it's breaking the lower band of support, which is what we tried to do on October 10th, though we never actually got the follow through from it for reasons that we've explained, or if it actually breaks to the upside. So one of the biggest signals that we could actually get a little bit of a change in this market technically was the fact that we squeezed to the upside. And by the way, the reason why we squeezed to the upside was because of this down move that occurred, really because the VIX had gotten elevated and pulled back. And it was the pulling back of the VIX that forced this extra buying combined with the daily chart technical breakout here through 674 that caused us to have 3 days of extreme upside extension for the first time. And ever since then, I think that this market has been trading differently than it has pretty much any point on the way up. There was those couple days in mid-August, and you had those two trading sessions here, end of July, beginning of August. But pretty much this trading in here has been different than anything that we've seen along the way up. Even in the face of like the really good Amazon news, the really good Google news, they gapped us up and sold us down intraday. Even in the face of the next AI deal and the next AI deal and the next AI deal, they gapped us up and they sold us down on these couple days here back on the 31st and November 3rd. And then, we got follow through on no news, no new news on November 4th, brought us down. That was a first that we were able to have a down day without a catalyst. We almost forgot that that was even possible. Rest day, up day yesterday, and then continuation to the downside again today with once again nothing really new. I just think it's a combination of the technical overhang that I just discussed, plus those 4.5 points that we keep talking about. And I said at one point earlier in the day today when we were breaking 674, I think for the first time, I was like, part of me just wants to like short the hell out of this market right now on the way down like there's no tomorrow. I'm still nervous about fighting the seasonality though. I still think that because of the seasonality, the corporate buyback bid, that even if we're able to trigger the CTA, trigger to create some additional selling, maybe we can get an unwind there, that you're going to be running into just more seasonality buying that's coming from the corporate buyback bid, the retail bid, some covering from the long short community that we know actually still has a decent amount of shorts and a decent amount of hedges on. That I do think stabilizes this on the way down at a certain point where I don't think at this time, that we'll take it as it comes. I don't think that we're setting up right now for the beginnings of a like 10 to 20% pullback right now. I think that we are in the midst of a pullback that is here. You guys just gave me the stats. We're down 2.8% or so in the SPYs, 4% or so in the NASDAQ from all-time highs. I think that this is a move that's a bit more than 3%. But I'm thinking it's like a 5%. Maybe we get a 7% down move based on those CTA triggers. And then that's actually where you are looking to come in and buy this dip, at least through the end of the year. And then we reassess the pullback probability, I think, as we get towards mid-January. But, definitely getting ahead of myself there. I like to think sometimes a couple months ahead, but be very, very open-minded to adjusting the thought process as the new news and new information presents itself. And I do also still think that if and when you get the government shutdown to end, that it's probably the same deal. The VIX probably comes down a little bit, market bounces a little bit. But at the same time, you can't help but wonder, you know, is that actually beginning to cause some damage in this market? Is that some of what we're beginning to see here as we're getting into November? I keep saying there's no new news, but it could just be that we're finally hitting the point where those, 4.5 points plus the government shutdown maybe is causing this market just to be a little bit heavier. And, by a little bit heavier, we've traded all the way back down to prices last seen 2 weeks ago. Take that for what it's worth. It's been one hell of a rally. There's a lot of upside from this 200 day now too, which I don't have any statistics on that, but it's starting to hit some points where I bet if you were to look at historical stretching from the 200 simple, I'm just guessing here that especially at highs a couple weeks ago, or a week or so ago, that we were like historically pretty stretched here from this 200 day. Uh, so I think that's all I've got from the big picture. I gotta think that barring some sort of headline that comes out overnight, I don't know if it's Tesla that saves it or Trump that saves it or another AI deal that saves it. But I got to think that barring some sort of a new overnight headline, that the low that we put in today is not the low of this down move because it's a day one down day. It's a day one down day and the first day of a break of support. We should be able to see a little bit more follow through than this. And the thing is, if we do get a little bit more follow through, it's not going to take much. A little bit more follow through will trigger those CTA triggers. And then I think that inherently causes the market to actually give even a little bit more than that, right? And that's where you get to like looking for that. I think maybe 5 to 7% overall pullback for the S&P. We start getting into like honestly a retest of these October lows. In my head for the moment is the area where I'm thinking I want to really be pulling out of a lot of the short exposure that I still have by that point, and maybe looking for some good names that I like with some strong corporate buyback bids, like a Google or something, to come in and buy. So it's just the bigger picture thought process on my end for the moment. As far as individual stocks go, I had a decent list today, but honestly didn't look at really any of them except for the QBTS. Called for the short continuation through 30 on this. It worked okay. It wasn't anything super spectacular, but it worked okay. Curious, how did AQP trade today? Oh, they traded that back down. Interesting. And how did DNUT trade today? They also traded that back down. Interesting. Um, I don't know. I don't really have anything else to discuss. Apple's still holding in great because it's a safety play. Amazon, because of its selling down, is finally not as extended. I still want to be a little bit more patient. You might be able to try buying this as it gets into the ADMA. I'm looking for more like a retest of these previous kind of, I think they're all-time highs, 237 area, which would be more in the midpoint of the 8 and 21 EMA for potential buy spot for Amazon off the AWS. Tesla, we're waiting, and Tesla's just such a nutty stock. We're waiting and seeing what happens with the shareholder meeting and the Elon Musk pay package right now. But they sold this down today, and it breached 440 again, but once again could not hold below it. So that 440 is really huge on the downside. I think that if you see Tesla, for whatever reason, trade below 440 tonight, tomorrow, that it's a short. But it's an if then statement. It's got to trade below 440 in order for that to um, actually happen. So yeah, I don't really have too much else to talk about. On the intraday of the market, we had some decent spots here where we called for pushing for short side. Uh, Here on the 945 upside tail, we had a short call out off that high. It worked really well. Called for like a really, really aggressive sort of the 1010 high. It did not work. It was probably enough based on when I called it out to get your risk covered. And then we had a secondary short call out though off of the deeper correction, which makes sense for this time of day to have more of a 15-minute time frame correction from this pivot high. We called out the short on the 1025 candle versus that high. That one worked out really well. I did not like the short on this bear flag here on the 5 minute. I communicated that. I know it kind of worked anyway. I didn't like that one because it was a short right into kind of where that um the put seller was, and I thought that was going to create some potential support, which it oftentimes does. But it still kind of worked, even though I didn't like that trade. And they tried to get it back above, but it looks like they closed it below his or her level, which I think was like 67.25. So I think that person took a little bit of a hit today, which is interesting. So yeah, we actually were able to push downside today and make some money from it. So that's cool. That hasn't happened in a while. And I think that's all I got. So, happy to answer any questions that any of you guys might have. Yeah, we've got a bunch of earnings after the close here. Looks like SanDisk is trading higher. SanDisk is a monster. Absolute and utter monster. Micron higher in sympathy. WDC higher in sympathy. We got Sweet Green trading down a little bit. I mean, stock's already so beaten up. What's this thing going to go bankrupt? We got Block. What is Block? XYZ. Block smoked. That's notable. Is a firm out today too? Not seeing anything from a firm. Open is out. Open's trading down through some support. So that's interesting. Below 7 here. Um, Hope Drake doesn't lose all of his money if he's long. Hope he never bought it. SoundHound out and down. Wow, they're just continuing to wreck these non-profitable tech companies. Stuff was such a bubble. Peloton's out. Peloton down then up, it looks like. Airbnb is out. Airbnb is trading higher. The trade desk is out. This is the only one that took the time before the meeting started to actually look at the numbers. The trade desk looks good to me. They beat across the board and they announced an additional $500 million buyback. And the stock is so beaten up into it. I think that there's a value in this company. I really think it's a value play at a certain point, but maybe not here, not yet. I know guys are also looking at pins as a value play at a certain point that tried to snap back a little bit, or match as a value play at a certain point that snapped back huge yesterday. Um, yeah, TSA lines at the airport for Thanksgiving is going to cause a lot of political pain if it goes on that long. Yeah, for sure. And we're seeing now the FAA saying that airlines have to reduce their operations by 4% at 40 high traffic points by 6 a.m. on Friday. Not great. Mike Reed here. I've been working on taking the options data that we get into the VTF and aggregating that data into a website that we can use to assess the data and use it to maybe find further edge in the data itself. I'm still working on the design, etc., but I want to share. Feel free to give any feedback. It doesn't have to be today on anything that you might think is useful. So a link there from Mike Reed that you guys can take a look at here on the team, which I think it looks really cool. I took a quick look at the site earlier. Mike sent it to me a little bit earlier. I think it looks really cool. Some good information in there. So appreciate that, Mr. Reed. From TT, a travel trading question. I will be traveling soon and using a MacBook Pro with an iPad as a second screen. I'm looking for fold-out screen travel screens. Q1. Any recommendations on equipment? Question 2, trading for smaller and less screens than my home setup is going to take some getting used to. Any tips? As I know that that Derrick travels frequently. Um, yeah. So first thing is I'm not great on tech, but I don't think the trading software really works on Macs, or you got to have like a Windows overlay type of system on top of your Mac for it to work at all. So I don't, I would say experiment that with that first, but we never recommend that you use the trading software on a Mac. It parallels. That's what it's called. It's like the Windows overlay thing. Secondly, yeah, I do travel a lot. So I have a laptop. I've got this Asus laptop. I don't know what it's called. I think that Pat ended up getting the exact same setup as me after I got it because it's a great travel setup. So I don't know, Pat, you know computers better than me. You might know what we have better than I do, even though I'm not impressed. Um, but yeah, I've got the laptop here, and I've got these two awesome portable monitors. They are Asus's. I'm not sure if they're the exact same as the one that Mike Reed just mentioned. But I basically have a three-screen setup when I travel, and it's great. I mean, look, it's a little bit heavy in my backpack, but th- two ultra thin travel screens plus a laptop, and I'm able to bring it around the whole world and still work like really well for the most part. It's not as perfect, obviously, as being on a desktop, but it works really well. And in fact, when I'm in my apartment, which is where I am right now in New York City, I'm actually still on the laptop, but I've got it connected to like big screens. And I'm a little bit limited here when I work out of my apartment because I've only got these two screens. This is my only setup where I only have two screens. My setup in Long Island has got four awesome screens. That's my favorite setup. The setup in the office that I don't like to use, I think has four. My setup in Idaho is three, all widescreens. And then my laptop here I use in my apartment, but I connect it to these two big screens, or I use this as my travel computer with the two travel screens, and it's pretty darn good. It's pretty darn good. It's not perfect because they're a little bit on the small side. Probably not great for my eyes, but I think it's just incredible that I'm able to have a three screen setup anywhere in the world and still be able to trade and do the VTF and everything at the same time. It's pretty cool. So I hope that helps. It probably doesn't help too much, but if you ask Pat, he might remember the name of this stuff better than I can, or I'll probably try to look it up. Actually, here it is right now. No, it doesn't even say what it is, except that it's an Asus. I'd have to find my like actual receipts or whatever from when I purchased this, which was a while ago. I've been buying these things twice though, because when I was in Spain and my car got broken into, they stole the computer and the two portable monitors that I had in there, and that really sucked. So I've purchased these screens twice, but they're great. Yeah, Josh with a live video of me trying to figure out how to use a computer. Popping over to the YouTube, not seeing anything in the YouTube. Maybe no one's following along in there anymore. No one even said hi. Uh, what's worth keeping up on your screen when you travel, and what's worth ditching? So, you stopped by the office one time and you saw my Lightspeed layout. I keep it very simple at this point. Um, it hasn't always been that way. There was a time when I had six screens and five of them were for trading and one of them was just for like email or whatever. And, I had all these different charts running at the same time of, different stocks and the indexes and the VIX and everything all at once. I honestly, over time, have been able to really simplify it. Even when I'm on a four screen setup, I'm really only using two of the screens for my trading. And the other two screens, I'm just, keeping an eye on email and stuff, just because, as most of you guys know, I kind of wear a couple different hats here at T3. I'm not only trading, I'm doing some other things too. So keep an eye on a couple other things. But, um, basically, I have one screen that is the screen that you guys see me share a lot, which is 5 minute chart of spies Qs, IWM, and a focus chart, which is switches back and forth between a 5, a 15, and a daily. And then on my other screen, I've got just one level two these days. I used to have three, plus my positions window, my orders window, um, one other chart that's based on my focus, so that way I can have like it's my execution chart that shows the execution dots on my focus on a 5 minute chart usually, so I can see the executions as I need to, and then an options level two, and then just some of my like short request account profile kind of information on the other screen. And that's it. And I just can scroll through if I need other things. If I need to see a different stock, type of a different stock. If I need to see a different time frame, I just click, on the bottom of my screens. I can just switch over to a 5 minute chart or a 15 minute chart or the daily chart simply enough. So I'm at the point where my stuff is super not sophisticated, super streamlined, not a lot of moving averages, not a lot of crazy lines, not a lot of indicators, 821 EMA, volume, Japanese candlesticks, and I'm good. You see these guys who have built out like these setups with like 100 screens and stuff, and it's like it looks cool, but you know, if they're able to use their 100 screens to be able to make more money than I can, good for them. But I don't I don't think that if I had a setup like that, it would add anything additional to my P&L, to be honest. And I know that it would. I don't need anything beyond just the two trading screens for me at this point. It's not going to add on anything additional in my P&L. That too. More tech headaches. Go into your search bar on your PC and type in system information to find out what you have on each system. System information on this computer. Well, I don't know. Does it say what type of computer it is in here? Uh, Hopefully it doesn't have all my personal information running in here and I'm just sharing it with the world. Asus Tech Computer. Oh, this is what it's called. It's a VivoBook Asus laptop. That's what it's called, a VivoBook. I remember that name now. And it's great. Anything else? There we go. A couple people saying hello over in the YouTube. What's up, guys? From Cyril, do you think the pullback might be engineered to get a liquidation break and allow institutions to load up more towards the end of the year? What is the probability of a red November and December, in your opinion? Sure. So, do I think it's engineered for that? I don't know. No, I'm gonna say no, but that mainly just because it sounds a little bit too tinfoil hat conspiracy theory to me. I just think it's how markets move. I think it's all about just flow of funds. I don't think it's engineered. And the question is, can the selling flow of funds that are happening overwhelm the buying for funds that are required from corporate buybacks, and that will determine the degree to which we pull back. Um, so that's the answer to that question. What is the probability of a red November and December in your opinion? That's the interesting question. I've touched on this in either a morning or afternoon meeting in the last couple of days. I don't remember, but like the interesting thing about this year, and by this year I mean we can go back a full calendar year to October a year ago, October 2024, is that there have been a lot of instances over the course of the last 13 months where the market defied traditional seasonality or traditional kind of more flow of funds. And it really circles all the way back to the election last year. We should have sold down in October 2024. That's what's happened in front of every election that I've ever seen, every presidential election I've ever seen. And it did not happen. But the VIX went up. It was almost similar but different to October of this year, where we did sell down, but we didn't sell down enough to trigger the CTA selling. And in my opinion, we did not sell down nearly as much as the VIX went up in October of this year. Very similar to October a year ago in front of the election. And then, we finally pulled back a tiny, tiny bit at the very, very end of October, but basically nothing compared to usual. The election happened, the VIX crunched down, and it created this move here, guys. This 3-day move here in the beginning of November to the upside is like the exact same 3-4 day move that we had here at the end of October based on the exact same reason. VIX crunched back down after the election. It created forced buying that created extreme upside extension. And then the exact same thing happened here. Obviously, there was no election, but the VIX got really elevated. It crunched back down. The market never sold off. Exact same thing October a year ago. And it created like this 3-4 day squeeze higher where we got extreme extension. And then we rolled down. We rolled down in the middle of November before patching a bit into basically kind of the end of the year or into mid-December at least. And then we, same deal here. We've rolled back down, and it's obviously to be determined if we catch a bid. November has been positive for 20 of the last 21 Novembers. Q4 is green like 80% of the time. So, most likely you're going to get a green November. Most likely you're going to get a green Q4, right? And we understand the why behind that. And especially when the market's already up into November, it tends to extend even higher. And again, it's all just kind of related to market dynamics and flow of funds. It's the corporate buyback bid turning on in November again. It's the fact that retail typically has a very, very strong month historically in November. And it looks like they bought pretty strong the last week as well. We'll see if that continues here in the month of November. So, given all of that, the probability of a red November, December is not great, but I would point to a couple other interesting things. Like I just said, this last 13 months has defied a lot of seasonality. Maybe it can do it again here in November. It just defied it in September. It just defied it kind of again in October. I guess October delivered a little bit of the seasonal volatility, but we certainly didn't get seasonal weakness from September through October 27th. Certainly didn't get that. And you can go back to some other calendar years, uh, not 2024, which is the election year, but if I remember correctly, 2023. 2023 was like, this is like textbook. Let me see if I can zoom in. 2023 was textbook. Look at this. Um, you know, really strong July. July is always the strongest year of the calendar. August was a little bit sloppy, maybe weaker than normal seasonality for August. But September, seasonal weakness coming in. October, volatility plus weakness. Look where we bottomed in 2023, October 27th, the exact date that you historically bottom. And then I remember us identifying, I had just gotten back from Africa and was so bullish down here because we were looking at CTAs had to start buying on up market, down market, sideways market, every time frame, every week, every month going forward. And we were super bullish into this extreme downside extension at the seasonal low. And seasonality worked perfectly. You had a green Q4, a really strong November, and I zoomed in. I cut off December, but a really strong December as well. That's what it's supposed to look like, supposed to in air quotes. So I can't help but wonder that given the fact that we have a lot of instances this year of just kind of defying the norms, if November can do that as well. But it still, I think, comes back down to a balancing of the flows. Is it possible to scare retail because they're losing their jobs and they're furloughed if they're working for the government and the government is shut down and et cetera, et cetera? Is it possible to lose retail? And is it possible for retail not buying or retail even selling? Because retail is a wild card, right? Like you can model what vol control is going to do. You can model what the CTAs are going to do. You can model what the corporate buyback bid is most likely going to do. And we know that the corporate buyback bid is going to be there. Retail tends to be very strong in November, but it doesn't have to be. You can't, you know, put a gun to somebody's head as they're losing their job because the economy is not doing well and say, hey, it's November, you have to buy. So it's going to be interesting. No matter what, you're going to have some degree of downside cushioning from the corporate buyback bid, and it's going to be very strong. $5 to $8 billion a day for most of the month of November. But today, because we were down 1%, you probably had $5 billion of selling that was coming from vol control. So that just outweighed the corporate buyback bid for the day pretty equally. So then you still, we got a positive gamma environment. So there was some buying coming from gamma today. You were still able to go down. So there's selling coming in from some other cohorts today as well. So I think that that's really what it comes down to. And that's why my general thought process is we can look to buy like this 5 to 7% pullback. You wash out some of the systematics a little bit further. Um, you extend the market a little bit to the downside. You get everybody a little bit scared. And then maybe we can come in and look to buy this market for a second half of November through December, early January, Santa Claus, January effect type of rally, and then reassess in mid-January. So that's what my general thought process is. But I certainly do have in the back of my head of like, wow, what if they do really overwhelm this forced buying and we actually continue to defy a lot of the seasonality that we've seen and actually have like a red end of the year? It's unlikely, but not impossible. So let's just take it one day at a time. But like I said before, my initial thought process is today's a day one break of support. if we can get a day two, the day two will probably trigger the CTAs, which will probably cause like further selling a day three, maybe even a day four. We start to get into extreme extension to the downside at 655, 660, something like that. Getting, $10 to $15 of extension to the downside in the spies and the Qs. Maybe you had a rest day there somewhere in the middle, so that the extension isn't as bad, which also means that you can actually pull back even further and then into that more extreme extension. Um, as we unwind some of the systematics, then maybe you can come in and look to buy the dip in that extreme extension. That's really where my head is for now, but open to changing that as things change. All right. All right, I'm gonna wrap it up there. Um, Thank you everyone for the participation. If you're on the YouTube, give me the thumbs up. Great seeing everybody in the VTF like always. Tomorrow is Friday. Do we get follow through? We will see. I don't know. Have a great night.